Hey, good morning, everyone. Today's Sunday, June 26th, and let's do a little weekend work. So this is a chart of the S&P 500 right here. As we see, we had a big rally going into Friday. Let me turn on this 20-day moving average. So the real reason I have an issue with this is all we did here was make a lower low, and now we're rallying into the declining 20-day moving average, and this whole time we're still below the year-to-date VWAP, which when I'm doing sector and industry kind of relative strengthening, I base everything off that year-to-date VWAP just because it's something to kind of anchor my bias from. It's not as long as the 200-day moving average, and it kind of gives me a better sense of where things are year-to-date and how they're performing year-to-date. If you were just like the average Joe Schmo, just buying every day. So even though we are kind of rallying, we did fill this gap here from when we gapped down on the 13th. But like I said, we're just now getting into that declining 20-day moving average. And also something to note here, whenever you get these RSI trend lines that break, usually it acts as resistance once it retests. So I'm very interested to see how we act here. Not only do we have that one, but we also have this one. This one might not be as relevant anymore since the trend line's so much higher, but it's just something to think about. So that's why I'm not super stoked on the SPY yet. Let's go through some other sectors. So here's the same thing on the equal weight S&P 500. Same thing. We haven't even filled this gap. This one's even farther below the 20-day moving average. Just because we have big moves up doesn't mean that it's a sustainable rally. It doesn't mean it's showing strength. It just means it's going up. So that's something to think about, when you're looking at all your sectors. The Renaissance IPO, a lot of people are stoked on small caps again. A lot of people are stoked on growth. Again, this one's way below the year-to-date volume-weighted average price, so that's something that I'm not really super interested in at this moment. And let me go back to the SPY chart. Another thing to be careful for is when you get these breakouts, and I'd say this is a breakout just above, this kind of small base that we built the last couple of weeks in the SPY, but when you get these breakouts that don't have a positive PPO histogram, it's something I always take note of. If we go back, I can show you some of it on Bitcoin, but when you have these breakouts and the PPO is still negative, it's usually a sign that the strength isn't there, and all of these breakouts should be seen as guilty until proven innocent, so that's also something to think about. But, you got to keep an open mind. If we get another huge gap up going into the open on Monday, then my bias is going to change drastically. I'm just kind of going to let price tell me what to do. So looking at bonds, same thing. I've been reading a couple books. John Murphy has a pretty good book called Intermarket Technical Analysis, and when you're trying to do macro views on the market, when you're trying to see what stage of the business cycle we are, we had bonds start to go down back in April. Let's see, when did they actually start to go down? Back in November of last year, and they've just been in an extreme stage 4 decline ever since. And they look to kind of be trying to put in a bottom here on the weekly chart. We lost this. Let me back that down. We still have this going on here. There's bullish RSI divergence happening at the moment, but I really wanted to see bonds tick up even more with equities moving higher, and kind of going back to that book, usually bonds are going to bottom before stocks do, so that's why I'm really watching the TLT here. Want to see that bottom before I'm feeling even more bullish on equities. Going back to small caps, so same kind of thing here. This one put in a little bit better lower low, if that's even a thing, compared to the S&P, but still a lower low nonetheless. We're still yet to make a higher high, so as far as I'm concerned, this is still stage 4 decline. We haven't even had a chance to build this stage 1 base yet. If we go back to the weekly chart, this is what we're looking at here. I don't really see a stage 1. It looks like a pretty defined stage 4 if we throw on this 20-week moving average. It's still pointing straight down. Still kind of, could say you're gaining even more downside momentum. And we tested it back on the 6th of June, so we could see a more sustained rally to the downside. Looking at Qs, same kind of thing. We're still below the year-to-date VWAP. The Qs look a little better because we do have this PPO histogram in positive territory, but way below the year-to-date, nothing I'm looking at. Dow Jones below the year-to-date. I've given my analysis a couple different times. This one matches the SPY more than the Qs. Nothing. Emerging markets, same thing. We did not put in a lower low, which is bullish. Let's go to the weekly chart. You could say you're kind of carving a stage one here, but this one looks iffy at best. That 20-week moving average is pointing straight down. A lot of overhead resistance, so nothing to be overly excited about at the moment. XLK, tech, nothing here, below the year-to-date. XLY, consumer discretionaries, nothing, below year-to-date. Communications, nothing, below year-to-date. Industrials, this one has accelerated the downside multiple times. We had this first trend line here, and then we got the second trend line there, and let me draw on the third trend line. This one looks like the financials nowadays. Just continuing to see strength in downside momentum, which is not what you want to be doing when you're trying to long stocks. Materials, this one had a big day, but it got absolutely crushed. Pretty large divergence here on the RSI. Just because it went oversold doesn't mean anything. If anything, you want to see these momentum oscillators gain momentum or show better relative momentum when they're going to the downside. So all we did was get a new lower low, RSI put in a new lower low, PPM histogram put in a new lower low, PPO line put in a new lower low. There's nothing really here that's telling me this looks like a great buy. Moving on to XLE. So if you know, this one's blue now on my charts. I can kind of talk about that a little bit more after I get through all these, but we're just below the year-to-date volume-weighted average price. We had this huge decline, as everyone's been talking about. This was like a 24% move down, and this was like the darling of the street for a while. Energy stocks could do no wrong, and then we put in that peak, which it looked like any other peak. We broke out of this negative divergence here. Everything was looking good. We went oversold, and then like that, we get this gap down, and it just accelerates even farther. So that's why you always have to trust your indicators. When we're getting into this oversold territory, look to be taking some off, look for the PPO to roll over, and this is on this June 9th date. That would have given you a good indication that, the party was coming to an end. You should probably get out. So nothing here on the XLE. There's no base. You need to start looking for bases. Let's draw one in for you so you can kind of see it. So back here in April of this year, kind of going until, let's say, May. So about a month they put in this base. You could say this is an ascending triangle right here. That's a buyable base. You need to look for volatility to get shaken out. You need to look for a transfer of shares from weak hands to strong hands, and that's kind of what bases do. So, like I said, nothing to do on the XLE except watch. Utilities, same kind of thing. We are below the year-to-date VWAP, but we have come up on it pretty closely. Watch this RSI trend line. It's still to the downside. We may get rejected here, kind of just like we did at the previous spot. So just because price is going up does not mean it's bullish. It's just price going up. Moving on to healthcare. So this previous high VWAP is going to become important again. I was getting really bullish on healthcare stocks back in May, and towards the end of May, we almost got a breakout, but I do use the ATR as a volatility band to kind of give me an offset of my breakout. So I offset this previous high VWAP back on May 27th. So that's why I did not get into this this fund, just because it never broke my ATR offset. So we're going to look at that one again. This one's getting pretty overextended. It's rallied very hard off these lows. And this one's pretty surprising because, like the other ones, all we did was make a lower low, and all indicators made a lower low. The histogram was right around even, but PPO line made a new low low. The RSI went oversold here, so this one is very surprising that it came back this hard. But even if we run and hit this breakout, RSI is going to be over 60 when we break over this previous high, and I don't buy when RSI is over 60. That's just a general rule that I have. So I'll probably be watching. Hopefully we don't get a lockout rally, but I'm assuming I could buy another stage 2 pullbacks. Going to staples. So this one was a pretty clear breakout. This one wasn't too bad, but we're still below. Let me fix this right here. but we're still below that year-to-date VWAP, which I'm only trading assets that are above their year-to-date VWAP, so that doesn't really help me out too much. This one we did get some bullish divergence. It was pretty minimal, but it's still there. And then same thing on the PPO histogram, but not on the PPO line. So 2 of the 3 kind of oscillators that I look at made a bullish divergence, and one of them was just following price. So always have to look for those, those indicators lining up. You want to get a confluence of confirmation. This one's kind of the same as healthcare. I'm going to be using this previous high VWAP as my breakout, but if we get up to there and we continue, we're going to be well over 60 on the RSI, so I will not be interested in this. Looking at real estate, same kind of thing, made a new lower low. Now we're just moving higher. Maybe we get rejected on Monday at this declining 20-day moving average, but who knows. And then finally, financials. So this one is very ugly. This one looks just like the industrials. We've seen acceleration to the downside, and you can visually see that pretty clearly just from these trend lines that I have on here. So we started here, then we made a lower low there, and now we continued making lower highs the whole time, which is not something that you see in an uptrend. So financials look like crap. They're way below their year-to-date. Even if we get a big rally, it's not going to have me interested because I'm only looking for things that are above their year-to-date. And now that was kind of the 11 sectors of the S&P and some of the bigger index ETFs. Now let's go look at some of these. So here's my blue list. This is sectors, industries, commodities that are just below their year-to-date volume-weighted average price. So this is the stuff I'm looking to be involved in. So here's CNRG. This is kind of like a TAN ETF. This is just a clean power ETF, and you can go, look up what holdings are in here. But look at this kind of base that we're forming. You could anchor a previous high VWAP off of this, and then use that as your breakout. So yeah, you probably end up placing your buy stop around 60 or 83, and then going from there. So that's one to watch. Next up is gold. So this one's kind of forming a stage 1 base here on the daily chart. So same thing. You probably just throw an ATR offset on the year-to-date VWAP and then go from there. Healthcare, like we talked about, pretty close to being below. Utilities, same thing. XOP, just below. XLE, just below. FCG, just below. Chile, just below. And wheat, just below. So the only really buyable bases that we're seeing right here are in gold. And then CNRG, like I said, those are really the only 2 trade ideas for these that are below the year-to-date VWAP. And then go into this orange list. So this is the TAN, the Invesco Solar ETF. So I'm currently long this through DQ. This one is not buyable in any sense. We've already, if we dropped our previous high VWAP, we already cleared that. Here's your pullback here. You probably could have bought around the 20-day moving average once we got around there. So this one is kind of just, a place you need to watch, look for another viable base. Same thing with lit. This one you could probably get involved in just because we did get this pullback, and you could buy this previous high right here just on straight resistance and watch it from there. Next up is Kweb. So this one is, you could also buy this. I'm already long this because I was using the previous high VWAP, and I got long this on Thursday, I believe, through Kweb, which is just the 2x bull ETF of this. So you could get long this around 34, 38, and then just, watch your stop pretty close. MCHI, this one's already gone. It's already over 60 on the RSI, so not interested in it. But look at that base that formed. This is what you need to be watching for. You get these big rallies, and don't be afraid to just sit and watch. You don't have to participate in every single rally, because most of the time they're probably not going to fit your bias. So just wait for it to get above your bias, which it did here on this June 8th. We got above that year-to-date VWAP, and then we pulled back and formed a nice base right under the year-to-date VWAP, which is exactly what I want. And then we get a break higher, and then that's where you get long. Next up is oil. So this one looking pretty ugly at the moment. We're just holding above this year-to-date VWAP. Everyone thought we were going to get a big breakout after we kind of got over this, 113 level. and then we reversed pretty hard. For the saving graces, we're kind of holding this RSI trend line at the moment, so maybe we get a bounce. Another saving grace is you can see that we are getting some hidden bullish divergence on the histogram, on the PPL line, and on the RSI. So if we do get a rally higher, maybe it has something substantial. Gasoline next. This one looks a little bit better because we are holding the previous high VWAP, but same thing. A lot of bearish divergence here on the RSI. This kind of looks like a head and shoulders top, but who the hell knows? Let's see. Next up is natural gas. This one's even uglier. Pretty clear top here. If this one breaks below the year-to-date VWAP, we'll probably see some acceleration to the downside. And then next up is corn. Same kind of thing, looking pretty toppy, but we are still above that year-to-date VWAP, so you have to respect it. Let's see. What else am I looking at? So if we're trading oil stocks, I'm probably going to be trading the PBF. So if we get a move higher, I'll probably be using PBF as my proxy, and I'm going to be using the previous high VWAP as my trigger. So same kind of thing, use an ATR offset of the previous high VWAP, and then get long from there. So that's pretty much it for my weekend routine. I highlighted the sectors that I think look best. Keep watching for those bases to form, and